Carmignac y hablamos con Axelle Pinon, es miembro del comité de inversión de la gestora. Axelle, thank you so much for having us this few minutes in negocios.
Thank you for having me.
Axelle, we are still looking at inflation. Well, most of the uncertainties from 2022 now are still uncertainties this year. Inflation, the next movements of central banks, of course the ECB that we have here closer, because now we are seeing how inflation in France, inflation in Spain is still with all these pressures, of course, and in the co-inflation is now the main worry for the ECB, because we are seeing how it changed the worry from the focus from the inflation, general inflation, from co-inflation, when we still see these persistent pressures. What do you think about these next movements? Because we are seeing how markets now are talking about extending from the ECB these rate hikes to February 2024. I don't know if from Carmignac do you share this view of, or if you are more in line with the ECB pointing to the pause in summer of this year.
Yeah, definitely. The market is really data dependent, as we have seen over the last weeks, both equity and fixed income market. And this morning, figures on the consumer prices in both France and Spain did have an impact still on the market. Our view at Carmignac, if we look at the inflation in Europe, we are definitely seeing that inflation should remain sticky during the first part of the year. And this morning, the fact that inflation in France had jumped by a record of 7.2% from a year ago due to food and services cost, and that in Spain we saw plus 6.1% due to really an unexpected acceleration of higher electricity and food costs, is really a reminder of the stickiness of inflation in Europe, but not only. And the figures this morning led to a very strong repricing from the market, where we had the expectation of the terminal rate, so meaning where the market is seeing the ECB, until which point the ECB should increase rate, moving up to 4% for the first time. And as a reminder, we were only at 3.5% at the beginning of the year, so we have seen a huge repricing from the markets. Our view at Carmignac is that the terminal rate should be between 3.5 and 3.75%, depending mostly on the pace of disinflation coming in the second part of the year. Because we see at Carmignac that inflation in Europe at least should go lower going into the second part of the year on the back of lower gas prices, and on the fact that the transmission of the tighter monetary policy to the real economy is starting to work. We have seen it across several indicators, like for instance the credit lending indicator, that signal a slowdown ahead. And therefore, in March, we will have the new forecast from the ECB on the medium-term core inflation. And we think that the ECB might revise down their medium-term core for inflation forecast due to this lower gas backdrop and to this transmission of tighter monetary policies that is starting to work.
Axelle, according to this view of the economic environment and monetary policy outlook, which is your main strategy and investment opportunities that you are focusing in?
So, if we have this view in Europe that inflation could decelerate going into the second semester, in the US it's quite the inverse, because we are currently in a disinflationary trend. And we have a positive surprise on the economy front, But what we are seeing is that what will be key once again is what is the trajectory of inflation going into the second semester, and it will depend mostly on two things in the US. One, the less favorable financial condition, either through higher rates or through lower equity, or and the higher unemployment rate. We need a higher unemployment rate in order to tame inflation. And our scenario is that by year end, inflation in the US should still remain at levels that are uncomfortable for the Fed, meaning that at some point the Fed will need to tighten for longer, which could create a recession in the US. So in terms of outlook, we definitely think that diversification should be among the guiding principle for investors this year. And in such an environment, we really identify two major opportunities. The first one is credit, and the second one is emerging markets, both through equity and through rates. What is interesting in credit today is that really the current risk-return profile of credit market is particularly attractive. We have level of yield that we haven't seen for decade, so very attractive as an investors. On EM also we have the same kind of pattern where we have on EM debt a very attractive carry. It's even a double-digit territory in terms of yield. And it's what we like about EM is that the EM world is today benefiting from a more limited inflation than in developed market, and therefore we should see at some point emerging countries to be the first to pause their rate hike cycle and even begin a monetary easing cycle. And it should be the case of a country like Brazil, Czech Republic, Poland, Chile. All of this should support the EM debt world. And within EM equity, without any surprise, our preference go for China. In China, we have a lot of the bad news over the last 2 years, like regulation, zero COVID policy, housing markets that are turning positive, and therefore offering opportunities for investors, even if we have to pay close attention and manage the risk of geopolitical tensions that are still here in the country.
Axelle, thank you so much for this analysis. A pleasure, as always.
Well done, Michael. Bye.